Welcome to the case study where you will investigate profitable firms that report zero or negative tax expense. In this case, you will use Alteryx to transform a raw data file and then upload the file into Power BI to conduct a visual analysis. We will begin by constructing a series of file folders which facilitate the identification of raw data and transform data. We're going to first create a file folder on your hard drive. Within that file folder, we will create two subfolders, a raw data file folder and a transform data file folder. We will save our raw data files into the raw data file folder, and then our transformed file and our Power BI visualizations will be saved in our transform data file. As you can see, the file folder name and the names of the files that you turn in all follow a common naming convention, which includes your first name, last name, group number, and date. Your instructor will provide specific guidance as to the preferred naming convention. Go ahead and pause this video and create your file folders. Save your raw data file into the raw data file folder. Then restart the video to learn more about the dataset that you will be using for this case. The raw data file is a panel dataset. This means that there is a separate row of data for each firm for each fiscal year. I have a snippet of panel dataset for Ameresco Inc. This company is not in your raw dataset. This is intentional so that we may showcase the data and steps required for the case without revealing the solution to the case. The columns contain information which identifies the firm, including using their central index key or SIC code, the company name, the industry code, the country of incorporation, and the filer size category. There's also a column that reports the fiscal year ending date of the information that is contained in that row. Finally, there are columns which contain the relevant financial information that you need to complete this case. Since you're likely familiar with financial statements, let's use a 10K from Ameresco Inc. to familiarize ourselves with the panel dataset. As we can see on this cover page, this 10K is for the fiscal year ended December 31st, 2021. We will focus on the information in rows 703 through 705, which corresponds to fiscal year ends 2019 through 2021. Let's look at how the information reported in the 10K corresponds to different columns of financial statement data in your panel dataset. Pre-tax income is reported on the income statement. Focusing first on fiscal year 2021, we see that income before income taxes, or pre-tax income, is $78,144. Using the information right below the title of the statement, we see that the financial statements report data in thousands instead of dollars. Adjusting the reported number for the scale allows us to find that pre-tax income for 2021 is $78,144,000, which is the same number that we find in the pre-tax income column of our panel dataset. Because the income statement reports data on a 3-year comparative basis, we can use the same 10K to trace back the numbers for fiscal year end 2020 and 2019. This income statement also reports the total income tax expense. While you now understand the relation between data in a 10K and the panel dataset, you might be wondering how the panel dataset was created. It would take far too long to manually key in all the data for all firms. The panel dataset was created using publicly available, machine-readable financial information aggregated and disseminated by the Securities Exchange Commission. Inline XBRL reveals how financial information reported in a 10K can be made to be machine-readable. Inline XBRL reporting requires firms to embed the metadata for the XBRL tagged fact directly in the annual report. What this means is you can click on any fact that has an orange bar above and below the fact to see a pop-up box containing the metadata. The metadata includes the XBRL tag, the value of the tagged fact, which fiscal year it applies to, the unit of measurement, the scale of the fact, the natural balance of the fact, and the sign of the fact. Additional information can be found using the directional arrows at the bottom of the pop-up box. The XBRL tag shown in the pop-up box matches the column heading Income Tax Expense Benefit in your panel dataset. These XBRL tags make the financial statements machine readable, which enable the creation of this panel dataset. Before we leave the income statement, we can trace the net income before non-controlling interest to the profit-loss column, and the net income inclusive of non-controlling interest to the net income loss column. We just saw how XBRL tags can be used to populate our panel dataset with financial information necessary for computing GAAP effective tax rates. Since ITEP focuses specifically on the U.S. operations, you also need pre-tax income and income tax expense for domestic operations only. Pre-tax income and income tax expense are commonly disaggregated by tax jurisdiction in the income tax footnote disclosures. As we went through the footnote disclosure, you may have noticed that the subcategories sum up to total pre-tax income and total income tax expense, and that both of these numbers are equal to the amounts reported on the income statement. Now that you understand more about the data, let's cover how it will be used. Your research objective is to identify firm years where a firm reports positive pre-tax income, but zero or negative tax expense. The ITEP definition focuses only on U.S. operations. I used light blue shading to reveal that for 6 out of 12 years of data, Ameresco reported positive domestic pre-tax income and zero or negative domestic tax expense. 4 of these years come in the last 5 years of data from 2017 through 2021. Using a broader definition of GAAP effective tax rates reveals that in 5 out of the 12 years, Ameresco's worldwide pre-tax income was positive, while their worldwide tax expense was zero or negative. Putting the shadings together reveal that the firm years, which would be of interest under the broad and domestic-only effective tax rate definitions, do not perfectly align. What causes firms to have positive pre-tax profits but report zero or negative tax expense? How much overlap is there in years between ITEP and GAAP measures? What type of tax policy changes could likely reduce instances where profitable firms report zero or negative tax expense? You can examine all of these questions using this panel dataset. Good job! Now that we understand the data and have prepared our file folders, we are ready to jump into Alteryx.